What is going on, ladies and gentlemen, and welcome back to another video. In this video, we're going to be talking about a change in state of delivery. I've seen a lot of people talk about this recently, so I'm going to do my best at explaining exactly what it is, because I see a lot of people kind of confusing change in state of delivery with a market structure shift when it's really not. So we'll have a look at it. If we take a look at what I've drawn out here, I want you to pay attention to the sell side liquidity that I have marked, right? We have sell side liquidity here and we have sell side liquidity here. Now, what candle takes out that sell side liquidity? It is obviously this candle right here. So really all the change in state of delivery is that we go from being bearish to bullish, or from being bullish to bearish. In this case, we were bearish. We had that sell side sweep. Then we went from being bearish to being bullish. So the way that we mark it is that we look for the candle that swept sell side liquidity. In this case, right, it can also be buy side, but we're using sell side liquidity as our example. So these three candles were the three consecutive bearish candles that took out sell side liquidity, right? These candles are three consecutive bearish candles. Had this candle right here been a bearish candle, right, this would have been the move that took out sell side liquidity. But because we have an order block here, these three candles is the move that took out sell side liquidity. So now all you do for a change in state of delivery is wait for a closure above those three consecutive bearish candles. Now it does not have to be three, right? Had it looked like this, the change in state of delivery would be here. And had it looked like this, the change in state of delivery would be up here. So all you got to do is find out the move that took out liquidity and then wait for a closure above those consecutive candles, or that one candle, depending on how it looks. So in this case, this would be the change in state of delivery. But had this been a bullish candle, this would now be the change in state of delivery, right? Again, because these two candles are consecutive and they took out liquidity. It is going to be way easier to understand once we jump onto an actual chart to show some examples. So that is exactly what we're going to do now. All right, this would be a perfect example of a change in state of delivery. We have a level of sell side liquidity right here. This sell side liquidity on a 5-minute chart gets swept by this candle here. Now, depending on what time frame you're looking at, the change in state of delivery may come faster or slower. So in this case, we are on the 5-minute chart, right? So where would the change in state of delivery be here? The change in state of delivery would be right here, right? Because these are the consecutive bearish candles that took out a level of sell side liquidity. But if we go to a 4-minute chart, where would the change in state of delivery now be? Right here, right? Because these two candles are the consecutive candles that took out sell side liquidity. Let's go to a 1-minute chart, right? Now we're on a 1-minute chart. This candle right here is what swept that level of sell side liquidity that we marked up before, but it also swept this level of sell side liquidity. And so the change in state of delivery goes from up here to right here, right? Because these are the consecutive bearish candles that swept sell side liquidity. But let's use a 5-minute chart as our example. So we swept sell side liquidity here. Now all we got to do is wait for a closure above this candle here to get our change in state of delivery. There we go. Now this will be our entry. You can either entry straight off of the change in state of delivery or enter like this as soon as a candle closes above. Stop will go here below this gap here, and we will target this high here. Actually, let's go for a 1 to 2. There we go. Let's see. And that played out very beautiful, right? Let's try and go to a lower time frame to see if we could have gotten a better entry. So let's redo all of this on a 1-minute chart again, right? Where's the change in state of delivery on a 1-minute chart? That would be right here. Now all we got to do is wait for a closure above there. Now obviously we know that this is going to win because we just played it, but there it is. Stop below this 1-minute order block here. And again, we'll go for a 1 to 2. And we could indeed have gotten a better entry, right? Now, this is all personal preference. Some people like to enter on higher time frames, such as the 5-minute or the 15-minute, while some others may like to enter on the 1-minute or 2-minute, right? This works just fine on anything. However, I will say that the higher the time frame, the higher the probability. It takes a lot more for price to get a 5-minute change in state of delivery rather than a 1-minute. So that is just Something to note, that is of course still a personal preference, so you can do whatever you want. Let's have a look at another example here on a 5-minute chart. You have a high that gets taken out here. It's buy side liquidity. Now where would our change in state of delivery be at this point? A closure below this bullish candle here would give us our change in state of delivery, because these two candles are consecutive, right? And they swept buy side liquidity. So all we got to do now is wait for a closure below here. See if we get it. There it is. And our stop will go up here. And then we'll target this swing low down here for a 2.79 RR. Let's play it out. Perfect. One thing that I like about the change in state of delivery is that you can enter just off of a candle closure, right? So that will make you not miss out on anything, right? You can catch big moves like this. Oftentimes what will happen is people know that this is the drawn liquidity, right? These equal lows down here is the drawn liquidity, but they wait for a retracement into, let's say, this fair value gap, and they never get it. So they are completely correct in their analysis and their drawn liquidity is completely right, but they simply just never get a retracement and a chance to enter, right? So a candle closure below the consecutive candles that took out buy side liquidity in this case. So entering just purely off of a candle closure, creating a change in state of delivery will make sure that you're not going to get left behind, right? Now, sometimes it may present a worse RR, but it is extremely nice when moves like this happen where you just didn't get a chance to get filled, really. Perfect example again here. We have a level of sell side liquidity here, and a tip to increase the win rate is to try and make them line up with other PD arrays. I mentioned this a lot in my videos, overlapping PD arrays, right? So we have that sell side liquidity here, and we have a 5-minute fair value gap down here. Let's see what price does. It taps into the 5-minute fair value gap and it sweeps that sell side liquidity. Now, maybe you know that the drawn liquidity is higher, but you're simply just not comfortable with entering straight off of this 5-minute fair value gap. You would like another confirmation, right? So here we have sell side liquidity swept. We hit the 5-minute gap. Our change in state of delivery would be a candle closure above this high here. Why? Because these two candles is what swept the sell side liquidity here. They actually also swept the sell side liquidity right there. And so that would be our entry right there. We get a small candle closure above. Our stop can be the bottom of this 5-minute gap here. Now, this is a great way to improve your win rate, right? Overlapping models. Now we have a lot more conviction, right? We have a 5-minute bullish gap that is holding. We have sell side liquidity swept. We have a bearish gap here that failed to hold. And then we have that change in state of delivery to the upside, right? So a very high probability play here. And then we'll go for a 1 to 2. And as you can see, that played out perfect, right? Again, we have that sell side level being swept, but you're maybe not comfortable entering off of this bullish PD array. So in order to confirm that your drawn liquidity is right, you see a bullish fair value gap holding, you see a bearish fair value gap failing, and then you get that bullish change in state of delivery. And then that could be your entry, right? Then you have liquidity. That's the first confluence. Liquidity being swept. You have a 5-minute gap delivery, second confluence. Then you have a bearish gap getting violated, aka an inversion fair value gap. That's your fourth confluence. Then you have that bullish change in state of delivery. That's your fifth confluence, right? So it's always good to, combine it with other PD arrays and ideas to give you more confluences and, more confidence, and just make the play higher probability overall. Have another look here. Now we're looking at it with a lot of displacement. We have obvious sell side liquidity right here that got taken out by this candle. Then we have sell side liquidity right here that also gets taken out by that candle. Now on the 5-minute chart, where would our change in state of delivery be? Right here, right? Because these bearish candles here did not sweep any significant liquidity out here. So therefore, these 3 consecutive bearish candles are the candles that swept significant sell side liquidity. So therefore, our change in state of delivery would be a closure above here. and not here. So let's see if we get that. We do in fact get that right here with a lot of displacement. Let's put our stop here, hoping that this is a breakaway gap, meaning that price does not trace back into this. Then we'll target the high here for a 1.8 RR, and price just rallies. I know a lot of people will get scared to long when we've already have, you know, 1, 2, 3, 4, 5, 6 bullish candles with such displacement because they feel like price moved without them. But sometimes it's just easier to follow the displacement, especially when you get a change in state of delivery as your confluence like this, right? But not only that, right? If we take a look out here, what were we delivering from? A bullish PD rate that held very nice, right? That sent us higher with a lot of displacement after the sell side liquidity sweep. We then violate a bearish gap here. We also violate this bearish order block here, and then we also violate this bearish pivot gap here, and then we get that change in state of delivery. So first confluence, delivering from a bullish gap. Second confluence, violating an order block. Third confluence, violating one bearish gap. Fourth confluence, violating another bearish gap. Fifth confluence, getting that bullish change in state of delivery with displacement, right? So again, those are 5 confluences. That is plenty to go long, and if that aligns with your higher time frame bias, then that's perfect. Have another look at another great example. We have sell side liquidity here, sort of have equal lows, and where were these equal lows swept? By this candle here. Now this stayed open. So without looking at it, I'm kind of assuming that this was an SMT with ES. Now I don't know, but that is what I would assume. So if this is our sell side liquidity level, where is our change in state of delivery? That would be right here, right? Because these 2 candles are the consecutive bearish candles that swept sell side liquidity. So our change in state of delivery is a candle closure above here. Let's see, there we get it. Not below this low because this is too far away, and then we'll target the end of this low resistance liquidity here. So let's look at our confluences. We have sell side liquidity swept here. We have our change in state of delivery here. We assuming that we have an SMT with ES here. That's another confluence. We violated this 5-minute gap. We violated this 5-minute gap, and we got our change in state of delivery. So let's play it out. Very beautiful. We have low resistance liquidity. That is another confluence to add there. Now, some people may ask me, well, we also took out sell side liquidity here. Why did our change in state of delivery change, right? Because if we were looking at it from a perspective like this right here would be our change in state of delivery, right? Because these are the consecutive bearish candles that took out sell side liquidity. But because we continue to go down, we get bullish candles here, then we sweep sell side liquidity here. This now becomes our new change in state of delivery. Had we not taken out this and gotten a closure above here before taking out this would indeed be our change in state of delivery. But since we didn't and we continued to sweep more sell side, this is our new change in state of delivery. But again, very high probability play, an amazing way to catch big moves like this. Now, of course, you want more confluences, sell side liquidity being swept, gaps being violated, maybe an SMT, low resistance liquidity, all that combined with a higher drawn liquidity from the higher time frames, and this has a very high win rate. Some of you may not be comfortable just entering straight off of a closure above. That's fine. You can also wait for a retest of the change in state of delivery or the order block that comes with the change in state of delivery. That is completely up to you. You can also trade the first 5A gap after the change in state of delivery, as you see right here. That all depends on your personality. I myself like to trade it like this to make sure I don't get left behind. That will give me a worse entry sometimes, but other times it will make sure that I don't miss moves like this. But that is basically it for this video. I hope you can tell the difference between a change in state of delivery and the market structure shift. If you were looking for a bullish market structure shift, you would look for a candle closure above the previous up closed swing high that did not need any liquidity sweep to form. The change in state of delivery is completely different. It does need a liquidity sweep, and it does not need a swing high to be taken out or closed above. So that was the ICT change in state of delivery. I hope you enjoyed, and I will see you in my next video.